Hey guys, welcome to the fourth episode of Capital Wheel Trades. Today we're going to talk about put selling criteria, the criteria that we have used when we select stocks to sell puts to give us the best opportunity for returns in the market. So the first factor that we consider is implied volatility. Implied volatility is the percentage that you expect the stock to move within a year. We like the 40 to 80% range because that gives you enough volatility that your call premiums are attractive, yet it's not so volatile that you have to worry about massive swings in the market in the 1 week period that we usually trade options. Second one, market cap greater than $1 billion. The reason we like that, it's a well-established company that has proven fundamentals about its ability to operate when you get to $1 billion in market cap. Third is daily option volume. We always look for options that are trading at least 5,000 options per day. That way we can get in and out of our trades whenever we want to, and you have good liquidity. The next one is relative to the likelihood that a stock is going to go up, which is what you want to have happen when you sell a put. You want the stock value to go up. Relative strength index. This is the activity and how much demand or how much selling or buying is going on with a stock. We like to target stocks who have a low relative strength index between 15 and 40. That means more people are selling than buying, which means the price is depressed and likely to go up. The next thing we look at is market price in the lower half of the Bollinger Band. Marcus is going to walk you through this in Robinhood, but the Bollinger Band is a band that gets put in place around the stock price, and we like it in the lower half. Again, it's an indication that the stock price is getting ready to go up. One of the other qualitative criteria that we use is it's just a stock we want to own. We like the space, we like the historical performance, we like where the market is going, so that over time we think there's going to be value created in that stock. And then the last one is we select the price of the stocks that we choose based on our account balance. So if you have a smaller account balance, you're going to want to select stock prices that are lower in the $10 to $20 range. That way, when you set aside collateral for 100 contracts, you're in the $1,000 to $2,000 range per position that you're in. So those are the criteria we use to select stocks that we sell puts against.
Okay, so now I'm here in Robinhood and I'm going to show you guys what screener I use, which we just talked about. So here, if you go into the search bar, you can create a custom screener and you can create the same exact screener I'm about to show you. So the first thing I edited was share price. I put under $50 as this is the appropriate sizing for my account balance. I chose market cap over 1 billion here, and I chose implied volatility between 40 and 80% like we discussed earlier, and average options volume per day of minimum of 5,000. So here it's showing me a list of all the stocks that meet this criteria. I'm going to choose SentinelOne as this is a cybersecurity company that has been pretty successful in the past, and it has done well for us in the past. So I'm going to choose SentinelOne. You can choose any stocks on this list that you think have good fundamentals and you wouldn't mind owning for a long period of time if you had to. So here I'm going to go over to Yahoo Finance and do the same analysis on the stocks here. So the first thing we're going to analyze is the Bollinger Band. You can add indicators here by pressing on the Indicators tab and pressing on Bollinger Band under Commonly Used. This band will pop up and it will show you the price within 2 standard deviations of the 30-day moving average. So this middle line here is the 30-day moving average, and this is 2 standard deviations away from that value. So as we can see, the bottom of the Bollinger Band is at 21.39 currently, and the blue line is the current stock price at 22.78. So it's pretty low to the bottom, and this is usually pretty indicative of the price moving up in the near future. So the next indicator we talked about earlier was the RSI. as we can see here, it is a indicator of oversold versus overbought. So here the number is 36. We like anything under 40, so this is also a good indicator of future upward movement. Lastly, here is the Robinhood screen. So I'm just going to show you how to trade this put on Sentinel-1, which we just talked about. So go over to sell put, choose a week out as you get the most premium with this duration. And we're gonna choose the 22 strike price here. The reason we're picking the 22 strike price is because it's very close to the bottom of the Bollinger Band, which is shown here as 21.39. We're gonna choose 22. We're receiving a premium of $15 for the week, so that's about 0.7, 0.8% return in the week. And we can just continue and place our order from here.